Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Nick Tsafos, partner in charge of New York with EisnerAmper, to discuss private equity environment as managers are actually sitting with a lot of cash on the sidelines. Nick, it's great to have you with us. Welcome to TradeTalks.
Thank you, Jill. Nice to be here.
Let's talk about the current PE environment right now. There's a little bit of doom and gloom out there, but there is a lot of money on the sidelines as well.
Yes, there is some doom and gloom. I think the banking crisis that we faced back in March with some of the banks experiencing that turmoil has put investors off to the sidelines. But like you said, there's money out there looking to find that bottom. Once you find the bottom, you'll see the transactions start to pick up again. I would say back in January, December of last year, a lot of nice transactions happening in the lower middle market part of the various industries, and our clients were able to capitalize on them. So some really nice stuff that I think is going to start picking up again end of this year, beginning of next year.
Are there sectors where you're seeing more deals get done or there's more investor appetite?
Again, there are sectors that are more interested. I guess all the AI is the big talk these days. However, I am seeing interest in technology companies that are adopting the AI into their technologies and making them more efficient. There's interest there. Healthcare obviously is another big one, and that's not just healthcare per se in terms of health services, but healthcare type of real estate. People are getting older. Valuations of real estate have come down a little bit, and you're taking some of these buildings that were used for one purpose and converting them into more of healthcare. So there's an interest there.
So the Federal Reserve, of course, took a pause for June, a little bit hawkish in terms of strategy going forward in July and later in the year. There's obviously still a long way to go in terms of normalizing rates. What impacts do you think could happen if we go into a lower interest rate environment? What's that going to have on private equity?
Well, obviously, for lower interest rates have a positive effect of private equity. However, higher interest rates have benefited institutional investors like pension plans. So up until a few years ago, interest rates were very low. Pension plans were having these liabilities that they couldn't fund. So there is a positive side to higher interest rates where these pension plans can de-risk their portfolios and be able to fund those obligations that are coming up in the short term. Now, with interest rates, people are looking more normal interest rates. Well, what's normal? Last 15 years or so, because of the financial crisis, we had very low interest rates. But before that, 5% was normal. I think what you're going to start seeing is companies starting to see that normal of the 4 or 5% interest rates, and the companies that can't handle it are just not going to be around anymore. We need that cleanup. But the companies that can handle it are going to be stronger companies and make a better investment platform for a lot of private equity investors.
Which lends to my next question, this valuation reset that we saw. In my mind, I think that was a good thing for the market, where companies are being tasked for growth for profitability, not just growth at all costs. Balance sheets matter, governance matters, learning how to manage a company when all you've had perhaps for the past 10, 12 years, it's just free money in the market. This is a good lesson for not only for VC and PE, but for founders as well.
That's right. So you're learning to manage money within a higher interest rate environment, manage costs better. I think what you're going to start seeing, not just from the interest rate side and managing costs because the interest rates are higher, you're also going to start seeing the de-risking of the supply chain. What we are seeing from clients, and I'm also on the board of EisnerAmper Global, our international affiliation, our firms across the world are basically telling us that they're seeing a lot more investment in Southeastern Asia. So a lot of these countries are getting private equity investment coming in and family office money to help spread out that supply chain. So companies are taking those cues of where the capital is going and managing their costs that way.
So if you had a crystal ball, right, what are your thoughts for back half of 2023 and early 2024 as it relates to private equity?
Sure. I think 2023 is going to be, the back half of 2023 is going to be the area where we're going to find the bottom. We're going to reset those prices, like you said earlier. And I think 2024, first 6 months of 2024, you're going to start seeing the deals starting to come through again.
All right, Nick, appreciate the insight. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.